The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, your Tiger Technicians Hour. My pleasure to be here Monday through Friday. And of course, this last Friday, we had a day off because it was just a half day. But actually, for subscribers, we knew that there'd be very light trading, that there might be a little bit of a pullback. And we tried to take that advantage of that. And we've added to our long positions, surprisingly enough. And so let's go to the story. And of course, we've had already 3 great hours with just wonderful technicians. Got this going all day. Just stay tuned. You've got TFNN at your back. So the Dow's down 8 at 17,790. S&P's down 2 at 2,088. This is going to be very interesting because the E-minis are down about 4. They're down a little bit more. And there's this pattern that I'm looking at here in the 120-minute chart, bumping up against tremendous resistance in the 2094 to 2095 area for the past, since about the 21st of the month. So this is the last day of the month. This is where there's portfolio juggling, a kind of taking out stuff that just didn't work, trying to add stuff that you think are going to, this is replacing your positions. And therefore, you can expect that on the last day of the month for November, there's going to be some kind of a whipsawing. Now, when the futures were up quite sharply this morning, look at this 10-minute chart here. Show you that from this morning about 4 o'clock, there was a fantastic rally. Went to a Chapman wave left side, right side price time match, and exactly right there. There's the midpoint right at from the high that was made. I took it on that little double top. 7:20 in the evening on the 26th, comes all the way back down, goes from the 296 area to 281 area, tries to rally, gets back, makes a little peak B, and that becomes a B minus, and then I use as a midpoint, and then I had the Chapman wave inside wedge target line, and that said it should go high. When I drew this line, believe me, there was nothing there. When you made that kind of H pattern with the potential double bottom at 281.50 to 225, just 75 cents higher, that's it. Especially if you look at the technicals, look at the 120-minute, look at the 10-minute chart. Is this the one? Yeah, look at this 10-minute chart. It holds the outer border, goes right through the 200-period exponential moving average. The stochastic flies up to 80%, holds nicely. The MACD starts to move very much higher, and you've got peak A, B, C, D, 3 Ds right at the top, up against the border. Now, this is not a Bollinger Band. This is a special a band that I had organized around a 200 period exponential moving average. This is a 10-minute E-mini chart. And what happened? You went to a 1-to-1 to the downside when you smashed through, and you've actually made almost left side, right side price time match to the right. So this is going to be very important because if the E-mini is able, and I think it will, is able to climb above 2089, it's at 2087 right now, in the next hour, that's going to say, okay, most of the selling has been done. Now there should be some kind of buying before maybe further selling. But interesting enough, what I'd said to subscribers is that in the Chapman wave, we had a Chapman wave trend gauge reading. And even though the futures are higher, I don't know how it will work. The Dow futures were even up 50 points. There should be a pullback to a minus, a rug pull, a sudden rug pull. And then we'll start to see how the day's travails are. But in the meantime, back at the ranch, Dow's now up to 17,800. Very nice action. Now, let's go back to our story. I want to get this out the way. Since this is going to be the end of the month, tomorrow we'll start off with the new month, December. So I sent out a number of charts over the weekend with the charts of the positions that we just started, got back into a brand new index. We've never had this index. No, I can't say never. Hardly ever have we had this particular index before. I always go for others. I treat it as something that's important, but it was a lagging indicator, and now I think it's going to be a leading indicator, but there's a good chance that end of the year, you very often see small caps start to move going into January. I don't know if it'll happen this time, but we're planning that maybe we can get that to unfold at this particular point. So let's go through the numbers. The Dow, INDU, is now up $1.97 at 17,800. You have this rectangle formation, and what I'd say to subscribers is rectangle formation is going to last a lot longer than your patience, so you're going to have to just wait for the breakout, either up or down. I'm thinking it could be up to get a leg D, but in the meantime, back at the range, we're just kind of stuck in a little range right here, and you've got this descending series of dashed trend lines right here, really, until the Dow can get to 17,930. It's at 17,799, right? Call it 17,800 right now. So it's another 130 points up. We just stuck in this range just at this particular moment. But I do believe that the downside for now is limited because you've got 83% in the stochastic and it's flattening. That's really important. The MACD has not yet crossed positive. Close, but no cigar yet. Now, let's go on. The S&P, so the parameters to watch are upside 17,870s is really positive. I think you're going to start to get to the 17,950 for leg B. And if there's a pullback, another pullback, it needs to go deeper than the 9-period moving average. I suspect that it needs to go down to somewhere around here, 17,000. You needed a 70-point sell-off, 17,730, and you're looking at more of a consolidation than I was expecting. Okay, S&P, SPX.X, you're down 0.90 at 2089. Same thing, sideways action. This is actually leg. This is peak B right here. And B says that at this particular point, what you're looking at are parameters of, at 2088, you're looking at parameters of 2097. Let me get that exactly right. 2097.07, starting leg B, leg C. On the downside, you've got 20. I'd put it at 2082. If you close under 2080 today, that's going to be a big negative, a short-term negative, that is. But the weekly chart is still outstanding at 83%. MACD is expanding. I like what I'm seeing here. Can't believe it, but I like it. Let's go to the QQQ series, QQQ. And you're at 114.24, down 07. Now, what's really important about this is it hasn't been leading. The NASDAQ has been in a sideways range, but when the markets, the S&P and the Dow had some nice big spikes to the upside, it participated, but it didn't really break to a new recovery high above 115.47. So I'm looking at this and I'm saying, okay, you can struggle, but you need to get to 114.95 for leg B in the daily chart, and a close below this 9-period moving average, 113.90, will be a short-term negative going to kind of a rectangle sideways move. Wow, that weekly chart is really good, and there's nothing that I can say other than the weekly chart is really good. Tomorrow we'll do monthly charts. We'll wait for this to close today. Meantime, back at the ranch, IWM is up 17 cents at 119.80. And I like what I'm seeing. We went long on Friday, just treating this more as an initial trade, but there's just a chance that we might be holding it for longer than I'm anticipating at this particular point. Now, this is the week that it has a chance to get to the 122-ish area. I don't know if it can do that, but if it can do that this month, December, I'm saying, I don't mean November, this coming month, that's going to be really positive. It'll help the weekly and the monthly charts tremendously because they were lagging. They were definitely lagging. So the parameters to watch, 118, close below 118 says be careful because 117.20 to 117 will be really critical support if it goes down that far. Okay. And another thing about the IWM is, look, there's a left side, right side price time match with an inside Chapman wave inside wedge target line saying by the first week of December, by the week of the 7th, I should say, there should be a test of 121.68. So we'll see what happens there. Okay, the VIX index. Now, this is going to be important. Why? Because the VIX index, VIX, has been pulling back. Very ugly candle on the VIX on Friday in the weekly chart because it was underneath the 9 period yet again. In the weekly chart, MACD was pulling back. Stochastics down to 9%. I'm watching this real closely. There is a chance, and it's just a chance. I'm going to put it in. I like to put both sides of the coin. There is a chance that this large failed arch cup formation right here is producing yet another one right here. Now, we will know a little bit more later on, but I'm just saying to you, VIX index above 17.20 at this point is at 1596, up 80. It's actually up today, up 0.84. People are really trying to maneuver and place their security measures right here by saying, I'm buying some insurance. That's what they're doing. But in the meantime, that 9 period moving average has been a tremendous resistance line on the daily. So we watch this by the end of the day. By the end of the day, Dow suddenly has another plunge to the downside, minus 70. We've got to consider that this consolidation could take a little longer before we break to the upside. Okay, here we go. Gold. I know a lot of people, emails and all sorts of things about gold. What about gold? What about gold? I got people who are real, I wouldn't say experts at gold because I don't know the actual trades, but I know from the history of their calls that they've been pretty darn accurate. And they're saying they like what they're seeing in gold. We tried it the other day. Look at this. How unfortunate is this? We bought a little small gold stock the other day at 3.60. I put a 3.50 stop on it. It was holding well, and then all of a sudden Friday there was this sharp move to the downside. So we got taken out, fairly small loss, but it's now way higher than when we got in, just 2-3 days later. And that's besides being, of course, besides being upsetting. When I say sharply higher, I mean sharply higher. It's at 372. It actually hit today, and Friday it went down to 346, and today it hit 375. I have to tell you, those are big percentage moves for just daily moves. So I'm looking at gold and I'm saying, I've been talking and showing subscribers that we are really close in the dollar to the what could be considered strong resistance area, and that's between 100 and 101. Sorry, 100. Let me say that again. Between 100 and 101.90, but I'm actually going to say 102 just to give you 2 points to say, 2%. But watch. You finally got that D and an E in the 120-minute chart, but it's still holding quite well. You've got leg D in the daily chart, leg C. And what were we looking at? We were looking at 140 to start leg C. And this is fascinating. Leg C in the monthly chart. And where did we go to today? What was the high? 100.31. I would say 9 cents on $100 stock. We'll talk about that when I get back. Dow's down 30.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Dow's down 4, S&P's down 1. I had a question about the dollar, the weekly chart, this cup formation that I've discussed. I thought I discussed it in great detail, but I'll do it again just in case someone missed it. Stochastic at 96%. MACD's expanding. I mean, this is a really good action. I don't expect more than a pullback. Look, we've got the leg, the body, and the daily. You've got the neck and the head. I don't expect more than a pullback towards 100.21. I do expect we're going to make C in the next day or so, and that's in the weekly. I'm sorry, in the monthly. The weekly extends leg C, and most importantly, let me just put this in here. I think I've got it, but it's below there. Okay, we're in a buy mode in the weekly, so the support is between 98 and 97. So I can see gold maybe having a little bit of a bounce at any point in the next couple of days, a week even. But most importantly, I don't think that the end of the dollar run is here. I do have something to say about the cup formation in both the weekly and the monthly, and that is if the stochastic, for whatever reason, on any pullback actually starts to decline under 80, that will say that the pullback will be much steeper. At this particular point, if there's a close in the 103 area in December, that is very different to if there's a close at 101.90 or 102.10, and then you start to move down very sharply. That says that you've made, remember the H pattern, the lowercase h pattern? That means you've made a new, let's talk about the H pattern. You make another low and you close above it. That says you can rally to the next peak or 9-period moving average or gap or resistance of importance, but then you can expect a pullback to occur unless you really get the technicals to change dramatically. In this case, it's the exact opposite, that if, in fact, there's a close below 100.39 and it starts to pull back below Friday's low of 99.31, last week's, I should say, that would suggest that 98.52 to 97.94 in the weekly chart could be tested. But if there's a close in the 103s or higher at any point, any weekly point, that is really going to say expect even higher prices. Question in the den as to the IBB. The IBB, which we remain short from the 393.10 area, is trading at 336.70. Once at 284. We didn't cover then, although I did say to subscribers, if you're swing traders, it would be a perfect time. I'm expecting that we are getting really close in this sector where the fund managers are going to start to pull their funds. And where are we? This is a gray A. This is an F/B in the daily. The technicals are going to tell us a great deal. I didn't want to add just yet. Well, we have so many positions I don't really want to add in any case. But to the short side, that is. But what I'm looking at is the parameters are, look at the struggle. It's been a fabulous run in price from 285 to 342 was a high. Yeah, 342s. That's 60 points. But in fact, it's taken so much time, it's taken so much effort, and the technicals have really worked hard to get to a positive rendition. But all of a sudden, at 88%, if the IBB starts to plunge below 330 support over the next 2-3 days, and that could be fund managers getting out, you've got to be real careful, because that stochastic would go back under 80%, and then I think the IBB becomes more vulnerable. At this particular point, it's just kind of shaking. I always think of a dog going into the water, and then it comes out, and it stands still with 4 legs stuck dead in the ground, and it shakes and shakes and shakes, and everybody gets wet. But the dog is absolutely stationary, and then it just walks off while everyone's drying themselves off. And that's kind of what happens sometimes in these rectangle formations. Shake, 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 and you have to wait for the bake. So let's do this. While I'm looking at the IBB, sector by sector, I had a question about, and a great question, so I thought I'd take another question. The question is from, let's see. Okay, here it is. Basil. I'm using the wrong mouse. Different screen, different mouse, give me a chance. Got it, I'm all set. I'm taking the day off today. I hope to catch your show today in the den, but just in case I'm not here, I have a question for you and your listeners. With natural gas prices so low, do you think there are some good investments out there related to this industry? It would make sense to me that the suppliers of heating equipment and other natural gas-reliant industries will be making a play for increased market share. Hey, I thought that was a really good question, Albert, and I'm looking at, you sent me a chart. I hear the music. You know what? The charts come up. I'm going to look at what you've sent me, and yeah, best gas utility stocks for 2015. I'll do some work on them as soon as we get back. Now the Dow's down 38. That's a struggle out there. S&P's down 5. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 40, S&P's down 5, and we're looking at the SJI, which is South Jersey Industries. I'm not sure about this because it made an A pattern, a failing, what we call the Eiffel Tower, up, straight down pattern, like an uppercase A, and it did go to an A from the doji low. Great move from the 23 area to 27 something, but now it's back at 23. So is this a double bottom? Well, there's one I would keep my eye on because the monthly chart is still very negative technically. So I'd keep my eye, but I wouldn't do anything. And I would tell you what I would do, Albert. I'd keep my eye on it, wait for it to try to get to the 23.70s. At 23.07, 70 cents shouldn't be a big deal for a $23 stock if it's going to be moving higher. And then let's look at it together. Just send me an email or call me in the show, and we'll look at it. That's SJI, which is South Jersey Industries, Inc. Next one you wanted was WGL. Now, I like WGL because it's done the exact opposite. It is trying to retest the highs. So this inverted Roman candle right here, it just got into that area, but it couldn't hold it. So here's what I'm looking at. WGL at 61.23, down 6 cents. Made a peak F/A with pretty good technicals in the weekly. Monthly chart is still very strong. So this is the best one. I know that you, from the list you gave me, there's a big difference between trading stocks that are moving to highs, all-time highs especially, and ones that are going to lows. So this is one that's going to the high. I like the pattern, And here's what I would suggest you do. Now, I know that with the implication of your question, this is just not a buy, not a buy and get out of in 3 days' time. But you've got to use a stop because it has made a peak F, and this is a retracement failure mode. So all I'm saying is it's a pretty good looking stock. It's holding very well in the sector. If this is in the sector that you sent me, what I'm saying is if it's within the list of those that you're looking at, this is one that I think is a lot better because let me give you the other one that you looked at, the UGI. Yeah. UGI, I just see this going sideways. UGI is not at $34, maybe buy less and look at WGL because the leader is what you want to go for, and this is the one out of the three at least that I think is acting much, much better. So I would do a position like this. I'd start a small position. Whatever you were going to buy, I buy 1/3 now. Because it's only 1/3, I would have a bigger stop. I'm going to give the stop at 61.23. I'm going to make the stop all the way down at 59.23. The moment it crosses 62.59, so at 62.60, you can put a buy stop because you want to be buying another 1/3 position there so that if it can test and then break above 63.20, the all-time high, I think it's an all-time high. Yes, it is an all-time high. You want to be in that position. And at this level, I would not get more than a 2/3 position. So I hope that helps you. And so that's the answer there. And a good question. I'm not sure yet if I've answered it specifically to your to the statement that you made that you're looking at something that would benefit from the lower natural gas price. But I think that the chart says that it's working well. Let's go to Mark in Denver. Mark, how are you?
Hey, Basil, how you doing?
I'm well, thank you.
Good, good. Hey, couple ones I want you to look at if you have time. First, the XLY, and then the one that we were looking at is a short, but it popped up with ATHN, Athena.
Okay, so let me do this. S&P Select Consumer Discretionary, I just want to do a SPIDER fund, SPIDER ETF, is trading at 80.87, down 60 cents. Made a new, 3 days ago, it made a new all-time high. Let me just double check what I'm saying here. 81.87, 81.90, yes, by 3 cents. And that says, by the count that I have, unless I treat it as an alternate count, and that was a C and this is a D, I would prefer to say that at 91% in the stochastic, the MACD needs to improve. I'm calling this a B for now. And that means that that was a C, just a nominal C in the weekly, but still a C in the stochastics at 91%. So far, the Select Consumer Discretionary SPIDER is, I can't believe it, is acting extremely well. So, yes. So parameters I'd be looking at on this, I wouldn't be looking to short it just yet because if it has an alternate count and that alternate count is favoring right now the more positive side, I just have to step back for a moment and say, okay, might be missing a good opportunity to short term, but I prefer to be looking at the weekly, which is still suggesting that there could be higher prices to come in December. Okay. So that's the XLY. Actually, let me make it clear. All it needs is at 80.91. There was sharp down day today, 56 cents, just because it's had so many big moves to the upside. If, in fact, by Wednesday or Thursday, it's trading at 82.30 or higher, that would confirm for me that we've got at least the month of December, because it still has to make a peak C and then a D, so the month of December to go higher. Sorry, I haven't finished. And if it breaks down, it's going to break down by closing under, well, definitely underneath the low of 77.25 that was on the 16th. But even then, if it closes under 78.50, I'd say, okay, be careful. The H pattern says there's a good chance it's going to try to test that low. But boy, that stochastic and MACD, they're holding very well. Okay, next question.
Do you have time to look at the Athena?
Yes. So Athena Health spiraled up. It did come down. So Athena Health trading at 167.56, up 36 cents. ATHN, my favorite stock to look at as a short, only for one reason. Twice we've been in the position and managed either to take a little bit of a profit or just a tiny loss, and then kaboom, the head of the kind of CEO, has to restate something. There's always a little restating something. But they are in, there's just no question, medical records are yet to stay, number one, and I know that for a very personal reason now down here. And the other is that Athena Health kind of has a lock. They got in early, and I think that Epic, I don't think they do the same sort of thing. I think Athena Health, in fact, I just drove by it a short while ago to go to Home Depot, and on the way, on Watertown Street in Watertown, I go right past Athena Health, and they look pretty healthy to me. But I always look at the stock, and I'm always looking to say, hey, what have they misstated now? And yet it just keeps climbing high. It did gap down on once again, a little something that they overlooked. That was on the 17th. It had closed the day before at 162.98. Next day, kaplop, it goes to 148. That's a big move down. But it just ignored that. And now it's in a leg F/B. And I have to consider it 82% of the MACD improving. Probably it's going to go a little higher before it starts to come down. So all I can say is it was a funny thing. When I looked at the chart around about the 23rd, I said to myself, gee, if this fills in the gap, I know these charts that fill gaps, they tend a sharp gap down on news, and then they go sideways with higher highs and higher lows. They tend to continue going higher, but I just didn't. I just decided to step aside, and then it had that spectacular move. It went from 158 to 166 in one day. That's a big move. So all I can say is that I would not do anything now. You know, it's on my list. You know, I look at it all the time. I suspect I'm going to give it a little more time with one or two other stocks that have shown residual strength that turned out. I mean, I can call this a residual strength because it hasn't gone to the 206.70 to 206.19 Chapman wave reversal from February 2014 in the monthly chart, where it plunged down to 97.30. But at the same time, you've seen how the IBB, how when the fund managers get out, they pile out. But when anything starts to stable and it's been a favorite for a long time, they tend to want to get back in. That's why I think that fund managers who are getting to IBB at this particular point are really playing a very belated game. I think that party is almost over. I don't know if Athena's party is over because electronic medical records, physicians' office systems, you're being forced by the government to be into this area. And once you've got the government behind you, that is a very strong tailwind. So let's do this. I'm just saying to you, we might open your chart package one morning and say, oh, look at that, down 25 points. But to get that one shot I'd rather wait for all the little ducks to line up, and right at this particular point, I don't have the ducks lining up on Athena Healthcare, but believe me, it is on my list.
Okay, sounds good.
And it's on my list for a terrible, terrible reason. In the stock market, you should never be about the stock. It should be about your portfolio. And in this particular instance, even though we were very lucky, twice to have gotten out, just one time we got out intra-morning a long time ago, and by the end of the day, we got out, I think, with maybe might have been a fractional gain or a very tiny loss. By the end of the day, it was down huge. Yep. And it happens really quickly, but it's on my list as a stock that misstates things occasionally. He's a very enthusiastic CEO, if you've ever seen him being interviewed, and he pumps the stock like crazy. Rightly so. I mean, he should do that. He's proud of the company, etc. But sometimes it's a little too enthusiastic because some things might have been a little overlooked. So we'll deal with that one of these days. So Mark, right. I'm saying to you, stay away. You will at some point, maybe we'll get a chance. I'll have it there. I'm keeping it on my. I might put it in as something that we don't actually buy, but I'm going to say that it could pull back because if I have too many stocks, I don't like it. It's just real hard for me to keep up with everything. But I'll put it in if I'm thinking that it's about to go down. There's another one another area that people keep asking me about, and we had one stock that has moved higher. It's still on my list. I still think it's one of the stocks that we're going to have we had a nice option play on it, but we haven't had that much luck yet on the actual shorting. We'll see what happens. But yeah, there are a couple. And you know what? It's fun to do if you can have really tight stops, but it's absolutely not fun to do if you make a mistake. And I do not want to do that where we're in the wrong position and then we're just stuck.
Yeah,
so
I get that. Hey,
this is one of those things.
Does the action in Ford concern you at all today? I know you got probably. I don't know if you have other people looking or waiting for you, but
you know what? I didn't even look at Ford this morning.
It's coming down in some fairly significant
look at
volume
that.
today.
Yeah, and we're short just a tad higher than this.
You're long. Yeah.
I'm sorry, real long, just a tad higher than this. GM might be
It's got
I'm just going to let it
announced.
play out. It's done this to us before, and then it suddenly spikes higher. But I have to tell you something. Last year, let me just go to the chart from last year.
They announced something about a union costing them like $600 million expense.
Oh my goodness, that's not good. They're not handling. The auto companies are not handling certain things correctly for sure, because these stocks, they're selling more cars than ever before, and these stocks should be spiraling. They should be way at all-time highs every day just about, and they're not. But what I want you to say is last December, if you remember, we did have a long position, small little gains and small little losses, but in fact it went from 13.26 to 16.13. That's a 3-point. It's a 20%. Is that right? Yeah, gain. And so in December, it's unusual for the very big cap items, the high price items, to be moving like this. And that's what I was a little afraid of last year. I thought this year we might have a little change in scenario. We'll see, because normally in December there are many sales, but in fact what we're looking at is that those old cars are just getting to people. I mean, how much can you spend on repairs? And I think at 13 to 17 years, the average has gone up a lot for people to keep their cars, and people are just saying, hey, this is the time we're going to just have to do it. So I don't think it's got a relationship to the season. Or it didn't last year, and maybe this year it won't. We'll see. In the den, Peaky just says F is only down 20 cents. Yeah, it is. So, and then there's a statement in the den. How's the subprime in orders coming along? Well, we've seen that they're making fantastic deals for people. But you know what's so interesting? They're making fantastic deals for people. But I'm just guessing at this. I have only slight statistics. I think people are bumping themselves up. They're adding all the accoutrements. They're adding the electronics. And when you think about electronics in automobiles, it costs them nothing. How much does it cost them to put in a rear view, a rear camera? Right. It's just it's nothing. It's just, it's what, 50 cents or 20, maybe let's give it $5, and they're charging an arm and a leg.
Well, just as a quick side note, my mother-in-law just went out and bought a Ford Escape over the Honda CR-V, so you like that better.
Oh, isn't that interesting? Oh, I'd like to talk about that. Hold on, because I wanted to talk about that, and we'll be right back. We'll be back with Mark and Denver talking cars. Down 56.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. We're looking at HMC, which is Honda, with Mark in Denver. And there are a couple of things I wanted to do during the break. I just quickly went to find my Consumer Reports magazine, because I remember reading quite a bit about the Honda and also about the Ford, and I couldn't remember which SUV it is. So I won't even talk about it because I don't remember exactly which model it was. But which Honda did she get? Which Ford did she get?
I think she got the Escape, which is a smaller SUV, over the Honda CR-V. I think she liked the seats better and some of the other features, which is interesting because they've been Honda people forever. So it was really interesting.
Yeah, because I've been looking at the Honda. I've been looking at the Hondas for a while, just looking to see what they're doing. I know my daughter-in-law has got the CR-V. She's happy with it and all. But I must say that when I'm reading now about different things that are affecting the Honda with the computer, the programming, the way it was very easy at one point, and now it's gone quite difficult, a little more difficult. And Ford was terrible. I think Ford is starting to improve. So I thought I'd just grab the charts, because the charts really tell me a lot more. And the Honda chart of the daily has got the H pattern, the same sort of H pattern. It's holding quite well, but the way the technicals are, it is, if anyone's looking, look at the chart on the left. That's the daily of Honda. Look at the one on the left now. This is the one of Ford. And you see that Ford technicals have had a really good rally in the stochastic and the MACD, whereas Honda did not. So that says that there should be some kind of support coming up quite soon for Ford. We'll see what happens. But most importantly is that the weekly chart needs very much to get into the 15 to 1510 area for Ford and the Honda, HMC, Honda Motor Company. If it can get to the 34 area, that'll be good. So I'm looking at it and I'm saying this is very interesting, because I know that I can't remember the model now. I'll recognize it immediately if I see it. But I've noticed that the Ford SUVs, the styling is kind of snappy. I like it. I think they have a little bit of an edge in style. Now, I've sat in it, but I've not driven one, any of them. And I'm hoping a little later on this month, or maybe in January before the auto show, I'm going to actually go out and to test a whole bunch of these cars just for myself to see what the improvements are, what is starting to lag. For instance, the Toyota has just extended the length of the cars. I think they've missed a huge market. They've turned the Honda Civic into a Honda Accord in size. And I'm looking at this and I'm saying, gee, there's a lot of extra room in that, where the engine compartment is. Some people like a small car to feel like a small car, and some people like a small car to feel like a big car. But my thinking here is that we're going to be watching to see. For instance, I've gone over the years, decades, people who have known me and known my market, my Trends Watch section, know that I've looked at engine size and style in terms of topping activity for decades. And if you go to the 69 cars where the front fender and the rear fender weighed as much as the car, the excessivity was just incredible. You're starting to see that now for the very first time in the V-shaped front and the V-shaped back. It is so expensive to repair anything like that. When you get to a stage where cost, I used to make a joke and I used to say that when the hairstylists start to design the cars, you're in trouble. And we're almost getting to that point now where car designs, they're not even sure what to do anymore. So anyway, that's where I thought I'd just mention that. But in terms of, it's interesting, you're not the first person that I've heard of someone moving from the Honda to an American product. So I'm pleased you told me. Thank you very much, Mark.
Have a good one. Thank you.
Thank you. Have a great day. Folks, Basil Chapman here, Dow's down 61. It's going to be a very interesting couple of days because you always get some kind of selling at the end of the month or buying, and this is the selling phase. We'll be back tomorrow. Have a good day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.